Hello, and welcome to the Business of Travel, the official podcast of the Global Business Travel Association. I'm Bev Heinrich, Program Director for GBTA WINiT, and I'll be your host for today's episode, which is made possible today by American Express Global Business Travel. Our topic today is called Empowering Capital, where we'll be exploring the transformative impact of female angel investors in the startups ecosystem. And in this episode, we're going to speak with Cara Whitehill, advisor and angel investor at her firm, Unlock Advisors, where she has taken early stage startups from 0 to 1 employees and larger organizations from $10 to $100 million in revenue growth. As a former leader at Expedia, Travelocity, Beam, and venture-backed tech startup Taxo, Cara has deep expertise running go-to-market functions for organizations of all sizes, spanning business development, strategic partnerships, sales and account success, product marketing, and product management. Cara has a focus on data and tech with an eye toward the travel space. And we're going to discuss the journey that got her to angel investing and delve into the untapped potential and immense value that women bring to the world of angel investing and how to support those women founders as they innovate with their own ventures. Cara provides the unique perspectives, strengths, and contributions of female investors that drive innovation, diversity, and positive change. So I'm really pleased to bring Cara to the GBTA WINiT community and to the broader GBTA network. And if you've not already met her, please meet Cara Whitehill. Thanks for joining today, Cara.
Thank you. I'm excited to be here.
I really wanted to talk to you because I think, well, we just talked about your background, but I really want to talk about your journey. I'd love for you to take us through your background and what led you to see the gaps and the opportunities in venture capital, and specific, what took you to female investing.
Sure. I would say it really kind of started for me when I was living in San Francisco. So I was out there for about 7 years. Really loved the Bay Area and being in the middle of all of that startup energy. I was there at a really interesting time, probably late 2010. So you were just starting to see companies like Twitter and Facebook and folks like that go public. At the time, I was seeing a lot of really interesting ideas get funded. A lot of the institutional venture capital firms that were out there were funding a lot of ideas that, to me, I would look at them and think, wow, those are really kind of, strange and weird ideas, but, okay, whatever. Somebody is finding some opportunity for that. But I noticed also it tended to be the same guys, and I use the term guys specifically because it was primarily all men, circulating in the same little ecosystems between Stanford University, the big venture capital firms, and other big tech companies. And so, I was seeing that happen. And then meanwhile, seeing a lot of really interesting ideas that, from my background in travel technology and hospitality, some areas that to me looked really interesting and really viable, but they weren't getting the time of day because they were founders that didn't fit that traditional profile. They weren't Stanford engineering, majors. They were women, they were minorities, they were over 30. They were living in, Omaha or Chicago or Nashville or someplace that was not Silicon Valley, right? And they really couldn't get the time of day for investors. So, those two things were sort of happening in my time out there. And I thought that was kind of interesting. Like, why are these really good ideas not able to get funding, but some of these really goofy things we're getting like piles and piles, millions of dollars in funding? There's a whole lot of reasons for that probably require a whole other podcast discussion. But I think the short version is, generally speaking, investors are more comfortable with people and ideas that they're familiar with and that they're comfortable with, people that look like them, people that came from the same school or come from the same background or what have you, right? And so a lot of these folks that I was seeing in my network that are, not the traditional folks, like I mentioned, Stanford CS computer science grads and investment bankers and whatnot, they didn't look like that. So they weren't really able to get on the radar, get a seat at the table. You see this a lot, like a 30-something male venture capital associate is probably not very likely to understand or appreciate the market opportunity for like menopause management startups. There's a ton of stuff going on in women's health right now in that sector, right? Or, a 60-something male partner in a VC firm is probably not as likely to appreciate the need for fertility planning technology and things like that. So there are whole entire categories of market opportunity that just weren't getting traction because they didn't look like the problems that traditional investors were familiar with. So around that same time, and this is really where I started to get interested in exploring angel investing. There were, like I said, companies like Twitter, Facebook, et cetera, that were going public. And suddenly you had a whole lot more people in tech that were flush with cash, right? So these are folks that were product managers or marketing managers or folks from operating roles. They weren't the traditional investment bankers or finance folks or, engineers. They were regular operators like all of us here. And now they had a lot of extra money sitting around from their options vesting, and they're looking around like, what can we do with this? And so a lot of that started to get plowed back into, well, a lot of it went into San Francisco real estate, but that's another story. A lot of that went into funding more startups. And so you were seeing a lot of these operators, a lot of whom are women, start to write checks to fund their colleagues who were leaving and starting new companies. Women were writing checks to these founders, and also, a lot of these founders were women, and they're leaving and they're going in and tackling new ideas and things like that. So up to that point, I'd really assumed that venture capital and startup investing was really like an investment banker's old boys network kind of thing. It wasn't until I started to see other people like me, these former operators and other women in technology, that I saw it as a possibility. And so, I will give a shout out to a friend of mine who, Bev, you may remember, April Underwood. She worked with us at Travelocity, 1,000 years ago. Yeah. So she had gone on after business school to work for Google and then Twitter and Slack. And so after her time at Twitter, she co-founded an angel investing collective called #Angels with several of her female colleagues from Twitter. And so their mission was, we're going to write checks into these startups that folks in their network were founding with that operating experience. And, they weren't exclusively women or female founders, but their mission was to get more women involved as angel investors in writing checks and funding these early stage companies. And so, she and I chatted a bit about that, and I was kind of following her mission with that. And I thought, that's really interesting. That's something I'd like to check out. So that's when I really started to get curious and learn.
That's amazing. It's got to feel really good to be able to, identify and then contribute to, new ideas and supporting women. So my next question, I really am curious. So you get through all of that, you kind of decide, if this is the direction you're going to go. How do you decide where your primary areas of investment focus? And I guess you do what you know, but I'm just curious of what grabbed your attention first, and how did you start?
Yeah, that's it's a great question, because I think there's not really any set prescribed way to do it. I wrote my first check into a gaming company that like a mobile gaming app that, I don't know a lot about that space, but they had at the time they had like a travel component because of the loyalty and rewards aspect of it. And so another woman in my network, Ellen Kessler, actually, who she does a lot of angel investing and advisory work for early stage companies. And so she had connected me with a founder, and I was really impressed with her, and I was impressed with their mission. And I thought, you know what, I'm gonna take a shot. And so I wrote a check, and on their, I guess, like their pre-seed round, so it's still pretty early. And they've gone on to do really good things. They have a solid business. They've kind of gotten a little bit away from the initial travel focus that was where I was getting involved. But generally speaking, I look for things where I can contribute something more than just the check, right? So contribute brain power in some capacity. And so typically that is going to be what I know, right? So travel and hospitality companies are sort of a natural space for me. Functionally, my background is more go-to-market strategy. So anything in that realm, specifically for B2B companies, where I can help them plan out what their go-to-market strategy should be, because in those early days, they may have the product and they may have some early traction, but they really need help figuring out how to scale it effectively, because you can't chase everything at that stage. You have to be very deliberate and be ready to pivot quickly when needed. And so those are things that, having been on both the startup side and the larger company side, working with startups, I have a lot of battle scars. So I look for opportunities with companies where I can contribute some kind of brain power in addition to the funding. So specifically, it's B2B technology companies, mostly travel and hospitality, but some enterprise software and some healthcare as well.
Interesting. And so a little bit, I was going to say there's some mentorship that goes along with this. It's what it sounds like. And is that typical that once you come into this, then it's just through engagement that you find a way to be able to mentor and kind of make an impact on the organization that way as well?
Definitely. It's something that there's not a prescribed roadmap for any of this. And a lot of it's just organic, right? And companies will be at different stages and their founding teams will be at different stages. Some companies where the founding team has been working together for a really long time and they already have that kind of shorthand in how to work together. That's a different kind of experience than a team where it's a founder, a solo founder, and they're looking for that co-founder, or they've got a team that's kind of new working together, but they've never, done their own business. And so there's a lot of foundational things that they have a great idea, but they need some help putting structure around it. So every company is a little bit different. But the other thing that I do look for that's important, and again, I don't exclusively focus on female founders, but it's important across the board. It's just founders that are coachable, right? So you want somebody that is really, they describe it as being committed to the problem, not committed to the solution, because you may have 8 different solutions that you have to try before you find one. But people that are really passionate about that particular problem and really looking for advice and guidance and help kind of seeing the blind spots that they may not see themselves. So that's really where I like to get involved. And I think the mentoring and coaching comes into play.
I got to think that's very fulfilling to be able to come in and be able to have those conversations and then see the change, see what happens through coaching. That's awesome.
Yeah. Yeah. And it's one thing too that I would note, angel investing is very different from institutional venture capital or even corporate venture. And that's something that a lot of people that are new to the space may not fully appreciate. But angel investors are investing their own money. And so, I have different metrics and different things that are important to me than a venture capital firm that is investing other people's money. And they have very specific targets that they're what they call limited partners or LPs. Those are the folks that give venture capital firms money to invest on their behalf. So think of it similarly like a mutual fund. And so venture capital firms' hands are tied a bit more because they have to invest in things that will get them a very specific return potential. So for them, it's much more of a math problem. And in many cases, venture capital investors don't have, they're finance people first and foremost. They don't always have a lot of operating experience. So they can be really helpful with writing big checks and with their network of other investors that can write big checks, but they don't always have that get your hands dirty in the weeds building kind of operating experience that angels can bring to the table. So that's why you tend to see angel investors in the earlier stages of startups where they need more of that hand holding and more of that brain power. And then you see institutional investors like venture capital firms come in a little bit later.
That makes a lot of sense. Are you comfortable sharing the types of metrics that you look for then, that your personal things that you kind of track and look for success factors?
Sure. Yeah. And I will say I've been doing this for 3 years now, so I truly have no idea if I'm any good at it or not from a return perspective, because the time horizon for these types of this type of investment is typically 5 to 10 years before you see some kind of exit. So in a lot of companies, an exit is either they go public or they get acquired, right? Or, in the sad case, they go out of business. But typically, it's going to be more likely to be acquired. There's some profiles of companies that are more likely to IPO, but those aren't typically the kind of companies that I look for. So the things that I'm studying when I'm evaluating my portfolio are, one is traction, right? And traction can mean different things depending on the company, but are they growing users? Are they growing, time spent? Are they growing partnerships? Are they growing, revenue, of course? So there's different things that you just want to see that progression. And then you want to see it, the longer they go, you want to see that start to compound. So you start to see that hockey stick. And again, at the early stage, a lot of this is just kind of finding your path. And so, it's going to vary from one company to another, but you do want to see those, that progression and where they are. And you want to see that the teams grow and evolve too. So that's another thing that's a little I would say my metrics are more subjective right now than objective, but I have a few that I invested in as like pre-seed or seed stage, and they've gone on to raise their seed and raise their Series A, and a couple that are moving on to their Series B. So those are the kind of metrics that, for me right now, I kind of look at as like, okay, well, they're heading in the right direction, which is good.
Yeah, that's got to be really exciting to be able to have those milestones, and that's exciting. I'm going to switch over and be really business travel centric for a minute, because kind of around the topic of fueling innovation, I know you do have an eye towards business travel, and one of the awards that we're going to be giving out this year in the WINiT Top 50 is around women innovating the way we travel. So I'm curious, are there any female problem solvers and business catalysts in the travel space that you are seeing? What's exciting to you right now, and what are you seeing?
Yeah, there's several, and not all of them are ones that I've necessarily invested in, but a few that come to mind. You were talking about NDC when we were having the chat before the podcast, and so there's a woman, Alice Ferrari, who is the founder of a startup called Kyte, Kyte, and she's just awesome. I was so impressed with her when I was first introduced to her, but her perspective, she worked at EasyJet and has been in the travel industry for a bit on the aviation and airline side. And so her perspective was, airline distribution is totally goofy, right? And if you had to start over and build, travel distribution from scratch, it would look nothing like what we have today, right? It would be like, she describes it like Shopify. It's all API based, and everybody can kind of connect into like, different hubs and get access to the type of content that they need at the right time, et cetera, et cetera. And so, having that kind of perspective, it's certainly a huge, heavy lift, and it's a massive infrastructure challenge, right? Given, where we are and, with NDC and other things. But I love the fact that she's taking that big swing, right? And she's not afraid to like ask those questions and be like, this is kind of silly, why don't we start over? And, she's being pragmatic about it, which I like, but she's got some good traction early with some airlines and some agencies, and kind of approaching it in a very methodical way. So, stuff like that. I really love what she's building. Rebecca Robinson, she is the founder of a company called Shiny, and she's working on solving basically, there's this labor issue in hospitality, especially around housekeeping. And, a lot of the challenges that they have is the systems they use to manage those. A lot of them are still like, clipboard and pencil and paper based, right? And so she looked at like, this is ridiculous in this environment where we have all this technology, right? So Shiny is developing essentially an operating system for housekeeping and facilities operations that helps make those staffs more productive, but it also does it in context of employee engagement so that they can do a better job and be more efficient, but also unlock more earning potential so that they can make more money. And then in doing that, it's helping hotels retain those employees and help address some of the labor challenges that they're seeing right now. So stuff like that, I'm like, that's because it's blending, and hospitality workers generally skew more female, right? So you have a lot of income workers that haven't really had an opportunity or had a tech-enabled opportunity to improve, their productivity and their earning opportunity. So I love what she's building there. So those are two that I've invested in. Anna Feinberg and Leanne Turner are working on a startup called Allo Index. Not one of my portfolio companies, but I love what they're building. I've done some informal advisory work for them. They were both travel managers with, I believe, BNY Mellon. And so their problem was having a way to easily track the ESG mandates from their company in relation to their travel program, right? So they're responsible for a large amount of spend, and they're determining which vendors and which suppliers to work with and partner with. And so they were struggling to find a way to associate and tie in their ESG mandates and goals and metrics with their travel spend and their travel program. So they were like, you know what, we're going to build it ourselves. So they've started a company called Allo Index that's, kind of bridging that gap between, companies and their travel programs and what suppliers can do to improve their ESG performance, and then making that more readily available to both parties so that everybody can kind of optimize from there and improve their performance.
Those are great. Those are so great. And I think we got to make sure that those awards they get included in that recognition there. Those are great.
Yeah.
So yeah, it is interesting to see when you're really kind of just take that problem and then can turn around and go be innovative and to have somebody like you in the
Yeah.
in their in their camp to support them. So very cool. One of the things, and I'm going to shift gear just a little bit because one of the things that we had talked about before is, again, your mentorship and advising and everything. And you had posted, I had seen a post that you had showed the books that kind of sit behind you that you said you refer to at least once a week. And I thought maybe this group that's listening might say, boy, I need some practical ideas, some practical way to go learn more about this. So do you want to talk just for a minute if what books should we say should somebody go read if they're interested in the direction you've gone and kind of putting together a small portfolio for themselves or whatever? What books
Yeah.
should we be reading?
Yeah. So there's so many different takes on angel investing. There's, some that are more, I would say, like textbooks. And one that was really helpful for me just to give me the lay of the land. And a lot of it's like contract terminology and kind of relatively dry stuff, but it's super helpful. And I refer to it frequently. And it's called Angel Investing. It's by the Holloway guides. Joe Wallen and Pete, I'm looking at my stack here, Pete Baltax. So that's kind of the nuts and bolts of angel investing. But then I think a couple others that I've really enjoyed. There's a book called Lead Upwards by Sarah Brown. And she is like a SaaS go-to-market expert. So she's been in kind of SaaS and B2B marketing and whatnot, but she's primarily been doing this in the startup ecosystem. And so she wrote this book, Lead Upwards, on what it's like working in a startup and how, as a startup executive, things are very different than if you're working in a bigger company, right? And so understanding the nuances of how you get things done in a very small company and how you interact with your board, how you interact with your investors. That was great to read from the perspective of the startup teams themselves. So kind of a different flipping the script on the angel investing one that I mentioned at the beginning. And then I think a lot of it's just, I really enjoyed Radical Candor. I know that's been out for a while and I just read it in full recently. And, that's one that's helpful no matter what environment you're working in, because it kind of gets you focused on just cutting through the BS and really finding a way to interact with people that makes you both more productive. Right. And as a leader, whether you're the person's boss or you're the investor, or you're a board member, whatever it happens to be, even if you're a peer, just having a context for how you engage with people and doing it in a way that's productive and direct and meaningful, I think can go a long way.
Very good. And maybe we can, we'll go back and get that list and make sure that we have those listed available for people who are listening who want to maybe go in and check those out themselves. So thank you for that. And as we kind of wind up here, I think sort of that final thought around collaboration for success. We think a lot about allyship. So I love it that you're supporting women. And I love it that you probably bring a different view and a different approach in how you support women. But obviously there's benefits of male-female investor collaboration and how we can be better allies. So is there any thoughts about how we can encourage more male investors to support these female-led initiatives and strategies? Any thoughts there?
Absolutely, 100% agree. I've been super lucky in my experience to work with a lot of really awesome men. And by and far, like everybody that I've worked with that I've come across in our industry has generally been awesome. But there's a few folks that I give a couple shout outs to that have been really great to collaborate with and learn from. Gilad Berenstein from Brook Bay Capital. He was a startup founder and then sold his company and then got more into the investing side. So he's a few stages ahead of me in the life cycle, but he's been great to learn from. Stuart Greif from Forbes Travel Guide. He does a lot of angel investing and mentorship, across the ecosystem and travel. So he's been super helpful for introductions and bouncing ideas around. Chris Hemmeter and Jeff Jackson from Thayer Ventures. So they do a lot of travel technology investing. And I know they have a lot of portfolio companies in the travel sector, including Traxo, where I worked previously. But they've been great for helping me learn and get more exposure to the investor side of things. And they're all, super friendly people. I know they're at conferences all the time. And I'm sure like if you ever bump into them and just strike up a conversation, they're so eager to help and share feedback and things like that. So, definitely love to see more of that. I think specific tactics, one thing that, I don't see this a lot explicitly, but I see it kind of talked about in general when you're on LinkedIn or Twitter or wherever, but investing in women is not charity, right? And there's a lot of mindset change that needs to shift in the sense that like, you're not writing this check expecting to never see that money again, right? You're writing that check for the same reason you would invest in any other male-founded startup, right? Because you're expecting a return. And so, there's a lot of good money to be made backing female founders and also to invest in female investors, right? So, female fund managers and whatnot. We're slightly more than half the market, right? Women have plenty of money of their own to spend, and women control the budgets for a lot of other channels, right? Whether it's travel procurement or what have you. So, finding a way to support women and understand their buying motions and their decision making and tapping into that, it just, it makes the market that much bigger, right?
Right.
Being intentional, good habits don't come from nowhere, right? So you have to have a plan. If this is important to you and this is something that you want to expand, if you're a guy and you're looking like, I got daughters growing up and I want to make sure that I'm, investing in their future as well, be intentional about it. Make a plan, give yourself some kind of target. Like, I'm going to have X new meetings for startups or new funders or founders or, whatever. Just give yourself some goals and then go after it, right? It's really no different than the way that they invest in male startups, male founded startups. It just might take a little more diligence if they don't have a network ready made for tapping into the female founder ecosystem.
Really good points. And I think we could keep talking about this, and I know we need to wind up here. So I really appreciate it. I think this is kind of a unique topic for us, a unique perspective. I know that you've got a lot to share with people who are probably going to get, have a few more questions about this.
Absolutely.
And, I love it. So with that, I want to thank you for giving us your story, your background, your approach, and the contribution that you're making to women in the business travel space. I'm going to do my shameless plug for WINiT right now, because WINiT is an advocate for gender equity in the business travel industry. And we welcome women and men to join on this journey to build the workforce of the future and to help women thrive at any level in their career, including if they're founders and starting out in their own ventures. So again, I want to thank Cara, and I'd also like to thank American Express Global Business Travel for making this podcast possible. Thank you, Cara.
Yeah, well, thank you for having me. I enjoyed it.
I appreciate it. And you have been listening to The Business of Travel, the official podcast of the Global Business Travel Association. For more information about GBTA and its work, visit gbta.org, and be sure to rate and review us wherever you get your podcasts. And until next time, thanks for listening.